Hey, good morning, everybody. We've got a mixed trade in the grain markets here on Thursday morning. I am not live streaming today. I'm recording, working from the road. It's 5:56 a.m. Central as I speak here. May corn futures up a half cent at 646 and a half. May soybeans up 10 and 3/4 at 1602. May Chicago wheat up 4 and a quarter at 790 and a half. May Kansas City wheat up 5 and a quarter at 817 and a quarter. May spring wheat is up 2 and 3/4 at 953. Just a few things on my radar here this morning. Paraguay says that it may need to import soybeans for the first time ever. The country's trade industry told Reuters that the country's soybean processors may run out of beans by middle of this year, June, July, August, somewhere in that time frame. Their production in Paraguay in terms of soybeans, it's going to be about half of what they thought it would be prior to the growing season. Now, Paraguay is not a huge soybean producer relative to, say, Brazil. Paraguay is going to produce 5 to 6 million metric tons this year. Brazil is going to produce 125 million metric tons. So Paraguay is very small. If there are to be soybean imports, they'll probably be from Argentina. We don't know that for sure, but that was one of the things discussed yesterday. So I think that this situation just speaks to the severity of the drought in places like southern Brazil, Paraguay, Uruguay, Argentina, places like that. Ethanol production in the United States improved last week. Weekly output 1.009 million barrels per day. That was up 1.5% on the week, up 11% versus the same week last year, but down 3% versus the same week in 2020. So generally speaking, that's a fairly normal level of ethanol production. That's not the problem. The problem is that ethanol stocks continue to grow. Stocks were up another 3% last week. They remain at record high levels seasonally. Ethanol stocks have risen 6 out of the last 7 weeks and have increased by 28% from their October low. So this essentially implies that demand for ethanol itself is quite a bit below actual production. So we're building stocks here. And I think a lot of traders are starting to question gasoline prices. At what point do gasoline prices get high enough to the point that it causes a material decline in gasoline consumption? A decline in consumption would be very bad for ethanol. So you've got these rising stocks, and if you put us in a situation here where gas is $4 a gallon or more, that would be a big problem for ethanol, I think. And I think the stocks issue in itself is a problem for ethanol. AAA quoted the national average gas price at $3.52 yesterday. That's up from $3.47 last week, $3.31 last month, and $2.54 per gallon the same week last year. This exhausting Russia-Ukraine news cycle continues. This morning, some fresh headlines, I guess. Western leaders accusing Russia of lying about its supposed troop withdrawal. U.S. officials reportedly said that Russia added as many as 7,000 troops at the Ukraine border. One thing that I've come to realize here, guys, is that the reporting from your major U.S. news outlets in regard to this Russia-Ukraine issue, ABC, NBC, your big cable outlets, the reporting is absolute garbage. It's terrible. They'll make a claim like Russia added as many as 7,000 troops at the border, yet they'll cite like one unnamed U.S. official. It almost seems like they're trying to make this happen, where the things that I've heard out of Europe and Eastern Europe are not nearly as damaging or as escalated as the U.S. media says that they are. So it's difficult to obtain reliable news. I'm not seeing anything drastically exciting or new here this morning. Rainfall in Argentina is going to be kind of hit or miss over the next week. Some of your key corn and soybean growing areas will see rain, others will not. The sources in Argentina said recently, just this month, that the remainder of February would be very, 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 very important in regard to crop production, crop prospects, that sort of thing. And the rains just don't look that great. So I would not be surprised at all to see reduced crop estimates for both corn and soybeans out of Argentina. Seen a lot of volatility in the energy markets this week and yesterday in particular. So late yesterday, this crude oil market rallied sharply. April WTI futures above 93. Traders citing Russia-Ukraine tensions, just a continuation of the uptrend. And then late in the day, it was reported that the U.S. and Iran were close to salvaging a 2015 deal that essentially limited Iran's nuclear activities. And since that deal is not in place right now, exports of oil out of Iran have been restricted and limited. The White House wants to open those back up, get some more oil into the global pipeline here. So that news sent the market lower. A lot of global buyers have had sanctions or restrictions on oil imports from Iran. So the oil market's lower this morning, and I think that's probably the reason why. The Fed released minutes from their January meeting yesterday. They continue to discuss is the key word, raising rates, shedding assets from the massive balance sheet, yet still no real official timeline for either event was given. Participants observed that in light of the current high level of the Federal Reserve's securities holdings, meaning their balance sheet, a significant reduction in the size of the balance sheet would likely be appropriate. Traders took this as being kind of a dovish deal. There's still no timeline on the rate hike. We think it's going to be March, but no official timeline. No official timeline at all on the runoff of this balance sheet, which continues to grow. Like I said yesterday, they're still buying assets this month, and they're going to stop, I think, by next month, and then they're going to try to unwind this thing. But the Fed is undoubtedly adding to the inflation problem with these easy money policies that we really, in my opinion, don't need given low unemployment, all these supply chain issues, inflation, that sort of thing. USDA did report a flash sale of soybeans yesterday, 5 million bushels of new crop beans, again to China. New crop beans is the key there. There's this big inversion in the market. New crop futures are more than $1 cheaper than old crop futures. So China's interested in new crop beans out of the U.S., not so much old crop. We do have our weekly export sales report this morning at 7:30 a.m. Central. Corn sales expected 500,000 to 1 million. Soybean sales 750 to 1.8 expected. Wheat sales 75,000 to 500. The cattle market was mixed yesterday. Live cattle were marginally higher, feeder cattle were lower. We'll see what develops there today. In the outside markets, we've got the U.S. dollar just a little bit higher. Precious metals are a little bit higher. The stock market's lower. The S&P's down 16. The Dow's down 108. I'll be back in the office tomorrow, guys. Have a great day. See you later.